What's up everyone, and welcome back to G4B TV, bringing clarity to cryptocurrency. My name's Ken, and if you're a new viewer and are a fan of crypto related news and content, definitely subscribe because I plan on creating a ton more deeply informative videos just like this one in the future, so you definitely don't want to miss out. Now, because my first video took a very high-level view of Robinhood crypto, I want to make a follow-up video for more advanced viewers who want to take a deeper look at Robin under the hood. Moving on, in this video I'm going to discuss Robinhood's security and storage of your cryptocurrencies. And I'm also going to talk a bit about how Robinhood crypto is regulated, which actually relates to how the company is legally structured. Also, because I personally find this stuff pretty fascinating, and so some viewers might think so too, I'm going to finally comb through the actual mechanics of how trades function on the Robinhood trading platform. I want to note that this is not a sponsored video. Robinhood just happens to be the first topic I chose to cover because it allows me such a big opportunity to touch on different aspects of traditional finance and investing, which I'm accustomed to, and that I also believe enhances the central discussion around cryptocurrencies. So without further ado, let's jump into it. Security. I don't know about you, but for me, security over my investments is a big sticking point when deciding which exchange I choose to trade on. So in that regard alone, I like Robinhood because they're already an established company with a proven track record, and bonus, they're based in the US. This isn't a bash on foreign countries, but I place particular importance on country of domicile because much like most of the West, the US has well-established and, for better or worse, strict regulations for corporations protecting both customers and investors alike. And so the big question then becomes, how does Robinhood store its users' coins and protect them against hackers? So, as is common practice, Robinhood stores its cryptocurrencies in a Katy Perry style mix of hot and cold storage. Hot meaning online, connected to the internet, and cold being the opposite. You guessed it, meaning offline and so not connected to the internet. However, it's the hot-cold ratio that's most important, of which Robinhood doesn't provide any further details. They instead generically state that they use the most cutting-edge security measures that are both process and technologically driven. I know, fancy language. The remaining disclosures remain brief, broad, and boilerplate, and go on to describe additional internal controls, including employee firewalls and constant internal reviews of current security procedures. As is considered best practice amongst advanced crypto investors, many would opt to circumvent any vulnerabilities in Robinhood's security by transferring their purchased crypto holdings to a personal hard wallet such as Ledger Nano S or the Trezor. However, I'm afraid I've got some bad news if that's you. If you check out the Robinhood website, they say that, and I quote, "At this time, we don't support coin withdrawals. However, we plan to do so in the near future." So unfortunately, there's no exact date for that feature, but it'll definitely be a huge positive when they do add those coin withdrawal capabilities, because it will be another shiny carrot for them to hold out to draw in more seasoned investors. So, we've established that users can't transfer their crypto out. What about transferring their Bitcoin or Ethereum in? Unfortunately, Robinhood has taken a hard stance against this, but again, given their language, leave the possibility open for change. According to their webpage, we currently don't allow transfers of your existing cryptocurrency assets into your Robinhood crypto account. Our primary concern is to prevent money from illegal activity being used for transactions on Robinhood crypto. We'll be sure to update you if and when this type of transfer becomes available. So, this is a smart but mostly safe choice by the company, who for obvious reasons are and will continue to be under enhanced scrutiny from regulators. Although it sets a benchmark for other online stock brokerages who may in the future also add cryptocurrency trading. Now, this is a protective policy to best serve their regulatory obligations of fulfilling anti-money laundering and know your customer security measures. So, That's the company's security. But individual users should also be cautious to protect themselves from personal attacks on their cell phone, laptops, or any other electronic device used, which, aside from the already used methods we apply towards protecting our online identities or safeguarding against viruses, the most highly recommended action I would suggest is to make use of Robinhood's two-factor authentication, which provides an additional layer of security that is really simple to implement and is available to users on any major cryptocurrency exchange. I would also suggest that if your phone has it, make use of the app's fingerprint recognition. I like it, not really because it's a lot faster and more secure, but because I like the feeling of imagining I'm a secret agent while doing so. That's all for security. I want to quickly mention their policy on forks, or rather lack thereof. From scouring their website, I wasn't able to locate any public policy regarding hard forks. So I assume if you hold Bitcoin on a Robinhood, don't expect to be showered by any newly forked coins. Now, on to everyone's favorite topic, regulation. Those used to the SIPC insured safety net that comes with stock investing won't enjoy the same luxury with their cryptocurrency investments. SIPC, if you're unfamiliar, is similar to the insurance that FDIC provides in the case of a bank failure, in which your balances are protected up to $250,000. For SIPC member broker-dealers, your investments are covered up to $500K, and that's where the company structure comes into play. Parent company Robinhood Markets Inc. has two wholly owned but separate subsidiaries. Robinhood Financial LLC, who are responsible for your stock, ETF, and options trading accounts, and Robinhood Crypto LLC, which is responsible for your cryptocurrency assets. The difference between the two is how they're regulated. Yes, Robinhood Crypto is registered with FinCEN as a money services business, and so is subject to the Bank Secrecy Act and therefore abides by money transmitter laws of most US states. But what we all care about is safety in the case of a loss, such as from a major hack, of which is a major problem for any business, but leads to more dire consequences for exchanges and their users.
Hacking's bad.
Because Robinhood Crypto is separate from Robinhood Financial, it doesn't have the same SIPC insurance in the case of company bankruptcy, and therefore leaves Robinhood Crypto susceptible to the potential fallout caused by having investors' money stolen. Now, in a doomsday scenario, this may lead to a Mt. Gox type bankruptcy proceeding for investors to reclaim any stolen losses. However, depending on the size of the loss, if they were hacked, if possible, I feel like they would likely choose to simply reach into their own company coffers to make good with their customers. Such has been the case with past scandals, such as the $500 million stolen from Coincheck in Japan. One day this nascent industry may get there, especially if the Winklevoss twins gain any major traction on their Virtual Commodity Association, which is a self-regulatory body similar to FINRA. FINRA, for those unfamiliar, is committed to investor protections amongst broker-dealers in the traditional financial industry. Now, on to more fun stuff. Trade mechanics. As discussed previously, Robinhood Crypto's trading capabilities include both market and limit orders. So let's start with market orders. When placing market orders, have I said market orders enough? They display the best available price to you, which is based on the exchanges they connect to. Which brings up the point that technically, I believe, Robinhood isn't itself an exchange. They instead act as a broker, meaning middleman or facilitator, between their users and other actual exchanges. But you'll notice in my videos and just in general with any major news source or investment professional you listen to, the word exchange is used very loosely to describe companies like Robinhood. Loosely meaning not to its full legal definition, of which determines how it's regulated. But back to the point. Co-founder Vlad Tenev, seen spotted again on CNBC, dressed as human Vulcan, First Officer Spock, along with co-founder Beju, dressed in his best rendition of magical mystery man Chris Angel, has said that they'll connect to many exchanges, up to a dozen or more, over the next several months. This is significant because the more exchanges Robinhood has to choose from, the more opportunity for liquidity they can provide to their customers. Liquidity is of particular importance during market free falls and flash crashes, as traders rush in to BTFD. This has been a major pain spot for competitor Coinbase and their customers. Now, more exchanges also means greater potential for lower prices, This is intuitive, well, because the more sources to get quotes from, the greater likelihood that one's quoting a lower price. And because cryptocurrency prices are rather sporadic to say the least, as a built-in protective mechanism, all market orders are actually adjusted limit orders. You can think of this as if your market order wasn't immediately filled, it can be converted before executing to prevent you from getting a raw deal. So, clearly Robinhood has done this to prevent user dissatisfaction and protect investors from the volatile tendencies and past history of cryptocurrencies trading tightly, particularly after major news headlines reach the investing public. Trading tightly in this case meaning that supply is limited during periods of excess demand, leading to those wild roller coaster price swings. And therefore, all market orders are limit orders collared up to 1% for buys and 5% for sells, which leaves greater potential downside, albeit minimal if you're a seller, compared with if you're a buyer. Robinhood makes it clear they're different from other competitors such as Coinbase by mentioning that any price difference you may see between the estimated price and the execution price is due to market movement and is not something that Robinhood profits from. Of which I mentioned during my spout about fees in my last video, that Coinbase does profit from this price discrepancy by pocketing up to approximately 100 to 200 basis points or 1 to 2% each trade. And because I'm a finance guy, another interesting thing to note, which I think is pretty cool, is on top of crypto's 24/7 trading hours, there's also no settlement times for cryptocurrency trades. You can compare this with stock settlement times, which are normally T+2, meaning the final exchange of, say, cash for stocks takes 2 days after the trade was executed, excluding weekends and holidays, of course. Interestingly, this again is another positive in terms of market liquidity for digital assets. Another frequent question from new traders is that they feel cheated that the price on the detail pages compared with the display price for Bitcoin or Ethereum is either higher when trying to buy or lower when trying to sell. This difference I've experienced on Coinbase can lead to ridiculous spreads. So ridiculous that the price you actually paid or sold at often is never reflected on their historical price charts, which can be pretty infuriating if you bought high or sold low, but higher or lower than what's actually shown on the price chart. So for Robinhood at least, the display price on your watch list, for example, is the mark price, which is simply the midpoint of the bid and ask prices. The bid is the highest possible offer made from a buyer, whereas an ask is the lowest acceptable price from a seller, with the spread being the total difference between the bid and the ask, and the mark price being the middle of that bid-ask spread. And I actually am using the GDAX order book to explain this example. Anyways, you're probably asking, how does this explain the difference in quoted prices? That's because although the displayed price will always be the mark price, if you're buying, your trade will execute at the higher ask price, and if you're selling, it will be sold at the lower bid price. The wider the spread, the harder for both parties to get the price they want, and the less liquid the market. And depending on how many Bitcoin you're transacting, it may be more of a challenge to execute your desired trade. Increasing market liquidity for specific assets through implementation of their fee structure is why exchanges incentivize market participants to make a market as opposed to take it. That's because taking sucks liquidity out of the market, whereas making injects liquidity into it. And liquidity in this example means that traders can buy or sell their crypto quickly and without causing a drastic change in the price of that cryptocurrency. So that's market orders. As far as limit orders go, it's much more simple. You can only set pure limit orders, meaning no stop loss or no stop limit orders, which are available for Robinhood stock traders, as well as to those making use of Coinbase's GDAX exchange. And therefore, limit buy or sell order trades will only execute at the exact price you specify. So unless another trader is willing to take the exact opposite end of your proposed trade, your trade will remain pending on the exchange's order book for as long as you specify. So what about trading sizes? The minimum trading size for Bitcoin goes out to the 5th decimal, which if one Bitcoin is 10,000, then that would be equivalent to 10 cents. Day traders are quick to point out that this is larger than a sat, which is short for 1 Satoshi, meaning the smallest unit of a Bitcoin, which extends out to the 8th decimal. Whereas Ethereum, despite also extending out to 8 decimal places, has a minimum order size to the 3rd decimal, which if 1 ETH is selling for $1,000, the minimum trade order would be $1. Basically, casual day traders who prefer the ease of use in fiat currency trading pairs will likely enjoy GDAX's zero market making fees, while more advanced day traders will continue to stack their sats on Binance. As far as cash transfers go, if you have a Robinhood account, you get instant access to your funds for up to $1,000. For additional cash transfers, settlement is subject to normal settlement times. One last note, the marketing choice of making losing days represented by pink as opposed to red is sort of a creative way to psychologically soften the blow when checking your holdings during down days, especially since the market status of cryptos have the possibility of getting 50 shades darker. As always, cryptocurrencies are extremely volatile investments, so please always do your own research before investing and never solely depend on the advice of anyone, especially YouTubers, yes, that includes me, when investing your money. And that goes for any investment, even crypto kitties, no matter how oddly adorable they are. I'm not your financial, investment, or crypto advisor. This channel is just to share my personal opinion in items I find interesting and entertaining related to cryptocurrency. So, wow, if you made it to the end of this ridiculously dense video, then you obviously are passionate about cryptocurrencies and investing, and so are exactly the type of person who would enjoy my future videos. Hey, how about that? So don't forget to leave a like and subscribe to the G4B TV channel. And because I covered a lot of higher level information today, don't be discouraged if it didn't all make sense to you. I'm more than happy to answer any questions you may still have in the comment section below. If not, I look forward to seeing you next time.